Hello everyone and welcome once again to the new episode in which we are bringing for you the 100 most important topics for your prelims 2026. And already we had like 12 sessions or 11 or 12 sessions. So now again I have brought some more important topics which were left, and this is in your YouTube channel with regard to your Drishti IAS. So once again, welcome all of you, and myself, I am Girish Venkatesh. So what about the topic today? But before we go into the topic, I know all of you must be very busy working hard with your preparations for your prelims 2026, and be sure that two things work when you are preparing for such a competitive exam. One is your hard work, and the other one is your self-confidence. Every now and then, I always tell everyone that have a confidence on yourself. When we have confidence, everything goes on the right track. So your confidence is what is most important. And the confidence will only come when you do hard work. Okay, so how about our topic of today? So we are going to discuss a topic that is balance of payment, that is referred as BOP. Now when I talk about balance of payment, then what is this balance of payment? Actually, balance of payment is nothing else, but it is a systematic recording of all economic transactions. That means I'm using the word systematic recording of all economic transactions which is taking place between the residents and the residents of the foreign country. That means when we are talking about the balance of payment, then this balance of payment is basically nothing else, but it is with regard to all the economic transactions. And when I'm talking about a systematic recording of all the economic transactions, then what are these economic transactions? Actually, these economic transactions, it will be with regard to the visible items, that is the goods. With regard to the invisible items, that is the services. And also with regard to the unilateral transfers. Unilateral transfers are like one side, you can say it's like one side transactions. Like for example, the gift, the donations. And also with regard to the capital transfers. So these are the balance of payment. Every country has a balance of payment. So basically they are doing a systematic transaction or a systematic recording of all economic transactions which are taking place between the residents of a country and that of the foreign country, and that too for a specific time period, typically a year. And these transactions, that means it includes the transactions done by a country's individual or the companies or even the government bodies. And when we talk about the transactions, as I said, economic transactions. So economic transactions can be visible items, that is the goods, invisible items, that is the services, unilateral transfers, that means those transactions which are like one-sided. That means there is no return in the form of money. Like for example, the gift or donations which are received, or the gift or donations which are done by the government of India. So there are unilateral transfers, that is one-sided. And the last one is the capital transfers. And these capital transfers, they actually change the asset and liability with regard to a country. Okay, so we have come up to the BOP. Now, when we talk about the BOP, all of us must remember that there are two accounts, or there are two components of BOP. One is the current account BOP and the other one is the capital account BOP. Now, this current account BOP and capital account BOP, before going into that, one should remember that the BOP, it is with regard to two, that is the credit side and there is a debit side. That means the BOP has two sides. One is the credit side and the other one is the debit side. That means when we talk about the credit side, then it means inflow of foreign currency. This is the credit side. And this credit side is actually the positive side of the BOP. And what about the debit side? The debit side refers to the outflow of foreign currency. And this is recorded as the negative side. Because why negative? Because from your country, the dollars or the foreign currency is going away. So here the example with regard to the debit side, it can be the import of goods. And when we talk about the export of goods, then this export of goods, it will be on the credit side. So BOP account, you all must know that it is a systematic recording which shows all economic transactions which are taking place between the residents and that of the rest of the world, and that too during a specific time period, that is in a year. And the BOP, it has two sides. One is the credit side and the debit side. Whenever there is inflow of foreign currency, now here foreign currency I will say as dollars. So whenever there is an inflow of dollars, it is recorded on the credit side. Whenever there is an outflow of dollars, it is recorded on the debit side. And always remember, the credit side is regarded as the positive side because there is inflow of foreign currency. As such, your foreign reserves, they are getting foreign currency into it. And when there is outflow of foreign currency, that means from your country, the foreign currency is going abroad, going to the rest of the world. So it will be regarded as a negative side of the BOP. So whenever a BOP account is being made by the government, then there are two accounts. One is basically the current account and the capital account. This is what is the practice which the RBI does. The current account and the capital account, and under this current and capital account, there are subheads. Like for example, in the current account, what are the things which are recorded? Like for example, in current account, it is the visible items, that is the goods which are recorded. In the current account, it is the services which are recorded, that is the invisible items, they are recorded. And in the current account, one more thing is recorded, and that is with regard to the unilateral transfers. So these are the three things which are recorded in the current account. But when these three things are recorded in the current account, then there is a bifurcation as per with regard to the credit and the debit side. So if there is export of goods, that will be recorded on the credit side. If there is import of goods, that will be recorded on the debit side. If there is payment of unilateral transfers, payment, it means that your country is giving gift, donations and all. So if there is a payment of unilateral transfers, that will be recorded on the debit side. If there is receipts of unilateral transfer, that will be recorded on the credit side. In the same way, when we talk about the services, which is a part of the current account, now the services can be in the form of services which are essential for the trade. For example, the services of shipping, banking, insurance. Now just remember about an international trade. Any international trade, They need the services of shipping, banking and insurance. I'm just giving you an example. Now, if these three services, they are owned by the Indian, and they are hired by the foreign company or foreign government. So what you will think, they are owned by the Indian and they are hired by the foreign company or foreign government. It means that foreign company and foreign government will be paying what? They will be paying foreign dollars. They will be paying dollars for the services which they are hiring. So it will be resulting to what? Export of services. And in the same way, if these services are owned by the foreign company or foreign government or foreign individual and they are hired by Indian company, government or individual, then that will be recorded in the debit side. And what about the capital account? I said you, when it comes to the current account, then the current account, as it is showing the transaction between the visible, invisible and unilateral transfers. So when we talk about the current account, then the current account actually shows the net income generated in foreign sector. What is the net income which is generated? That means the current account actually records all the actual transactions of goods and services which is affecting the country's income, the country's employment as well as the country's output. But what about the capital account? The capital account is a transaction which is taking place between the residents of a country and the rest of the world. But because of this capital account transaction, there is a change in the ownership, there is a change in the asset and there is a change in the liability. That means if our country is borrowing, for example, if our country is borrowing money from the IMF, then it will be a part of the credit side. But because of that borrowing, the liability of the country, what happens? Increases. In the same way, if foreign direct investments are taking place in India, that means the foreign multinational companies, they are coming to India, they are investing in India. It means dollars are coming in India. And as a result, the financial assets are being created. So that's why I said there is a change in the asset and liability. So overall, I gave you a brief description about all of this. So let us see in detail what is all of this. So if you look in detail, what we find is that this particular slide, it is showing that the current account, it has trade in goods. And please remember, when we talk about the trade in goods, it's also referred as merchandise. It is also referred as what? Merchandise. So merchandise is something where you are doing export and import of goods. So that is what is merchandise. And whenever there is a trade in goods, it means you are talking about the visible items. So when we have export of goods, that is the credit side. And when we have import of goods, that is the debit side. And please remember, when we are talking about India, then India, when it comes to the trade in goods, it has a deficit. It has a deficit situation. Why deficit situation? Because the import of goods is more than the export of goods. It means the outflow of foreign currency or the debit side is more than the credit side. So there is a deficit. So there is a deficit situation when it comes to the trade in goods. What about the trade in services? As I said you, one of the trade in services is the net non-factor income. Non-factor income means with regard to the services of shipping, banking, insurance and all. That means if Indians are owing these services and they are being hired by the foreigners or by abroad, then that will be recorded on the credit side. But if these non-factor services, they are owned by the foreigners and hired by the Indian company or government or something like that, then that will be recorded on the debit side. Why? Because there is an outflow of dollars. So please remember this concept: inflow of dollars, credit; outflow of dollars, debit. So here what happens? Export of non-factor services is regarded as what? It is regarded as a credit side. And in the same way, when we are importing those services, it is regarded as a debit side. In the same way, there are factor income. Factor income in the sense, these factor income can be in the form of, you can say, wages or salaries. These factor income can be in the form of investment income in the form of like dividends or interest. So any factor income which is received by the country, by India, it is recorded on the credit side. And any factor income which is paid to abroad, that will be recorded on the debit side. But when it comes to the trade in services, remember, India has a surplus. India has a surplus trade in services. Remember that India, it has a surplus trade in services. And the last one I said you, it's transfer payment. I gave you the name unilateral transfers. And when it is unilateral transfers, I said you it is one-sided payment or one-sided receipts. That means without any promise of a return, either you are doing payment or you are receiving something. And the best example of transfer payments or receipts is gifts, donations and all. So whenever there is a payment of unilateral transfers, that will be recorded on the debit side. Whenever there is a receipt of the unilateral transfers, that will be recorded on the credit side. Got it? So the current account includes visible item, invisible item and unilateral services. Visible item is goods, invisible item is services, and those two invisible items, what we have done, we have divided it into two. One is the non-factor services and the other one is the investment income. In non-factor services, we have the services of shipping, banking and insurance, also tourism and all, and that all with regard to the credit and debit. And in the same way, investment income, the investment income can be in the form of interest, in the form of dividends, in the form of profit, in the form of wages and salary. So anything which is coming to India is credit. Any investment income going out of India is regarded as what? Debit. So everything you have to put under the credit and the debit table. And overall I said you, when it is trade in goods, India has a deficit trade in goods. When it is trade in services, India has a surplus. That means when it is goods, the import of goods, it is greater than the export of goods. That is, inflow is greater than the outflow. And here the export of services is greater than the import of services. As a result, the credit side or the inflow of dollars is greater than the outflow of dollars. So overall what I have done here is that to make things easier for you, I have written here the current account. What happens? It records all such transactions of goods and services which actually affect income, output and employment. Remember that current account jo hai, it is only affecting your income, output and employment. That means it actually shows the net income generated in the foreign sector. Now, when we talk about the remittances, there is a word called remittances. Do you know what is remittances? Remittances means if some of your relatives, they stay abroad and they try to send money to you, and in return you are not doing any favor to them, then that is what is called as remittances. And please remember, India, it has the largest inward remittances in the world. Largest inward remittances. Inward means credit. Largest inward remittances in the world. And that is about $130 billion. Approx, it is $130 billion. This can be a question for your prelims. Ki India, it is the largest inward remittances in the world. And when we talk about the inward remittances, then in India, the remittances, they generally come from USA and from UAE and all. Earlier, it was the West Asia from where the remittances used to come the most. That is from the Gulf countries. But nowadays, in the past 2 to 3 years, the remittances, India is receiving the largest from the developed countries like USA and all. Why? Because of the nature of work. Here, the nature of work is related to some white collar or blue collar jobs. That means stability of work. But there in the Gulf countries, in West Asia, the work is not that stable. That means it's not sure that you are there in work all the time. So now what happens is that India is receiving more remittances from USA as compared to the, you can say, historical remittances which were received by from the Gulf countries. And also we must remember, so as I said you, that the value of merchandise imports, that is goods imported, is greater than the value of merchandise export. So there is a deficit when it comes to merchandise. That is when it comes to the trade of goods. And always remember, when it is the trade of goods, that is a term called as BOP. Sorry, there is a term called as BOT. That is called as balance of trade. Now, when I tell balance of trade, then balance of trade is only with regard to the goods. It is only with regard to the goods. It is nothing to do with the services. It is nothing to do with anything else. And BOT jo hai, it can be favorable, it can be unfavorable. But whenever we talk about BOP, BOP is always balanced. Why? Because there is a system which is being used. There is a method, and that is called as double entry bookkeeping system. Because of that double entry bookkeeping system, the balance of payment is always balanced. It is always balanced. But the balance of trade, which only includes the goods, it can be favorable, it can be unfavorable, it can be balanced. Okay? And also, this is a narrow concept because it is a part of BOP. But BOP is a wider concept because it includes current and capital account. Okay. Then what about the services? There is a surplus in service which India has. And when we talk about the overall current account, then the overall current account can be balanced. When it will be balanced? When the credit side, that is the inflow, is equal to the debit side, that is the outflow. When it is surplus, then the inflow will be greater than the outflow, that is the credit side will be greater than the debit side. And when it is deficit current account, it means that whatever is the credit side, that is less than the debit side. And if you look at the overall current account of India, then the overall current account of India is in deficit. Remember that. The overall current account of India is in deficit because our imports with regard, our trade with regard to the goods is always in deficit. So the overall experience with regard to current account in India is deficit. What about the capital account? I did tell you, when we are talking about the capital account, then the capital account BOP, it is nothing else but it records all such transactions between the resident of the country and the rest of the world. And that brings a change in the asset and liability of the country. So this current account is actually bringing a change in the asset and liability of the country. Or current account जो होते हैं transactions, they can be of short term, they can be of long terms. ठीक है? So there can be capital transfers and all. So here the first heading comes with regard to what? The first heading comes with regard to investment. Now investments can be of two types. There can be a direct investment. Direct investment means FDI. It is a direct investment. And there can be a portfolio investment. all of you must know the difference between direct investment and that of a portfolio investment. Remember that whenever we are talking about a direct investment, then with that investment you also acquire the ownership rights. You also control that asset. That is what is direct owner. That is what is direct investment. For example, if I am purchasing a property abroad, that means if I am purchasing a house in US, it means it is a direct investment because I'll get the ownership of the house. Got it? And that ownership of the house is what? It's a part of that direct investment. But with this purchase, remember what I'm saying, this purchase, it is giving me an ownership of the asset, but it is resulting to the outflow of dollars. And when it is resulting to the outflow of dollars, then it means what? It will be recorded on the debit side of the current account, debit side of the capital account, BOP. Got it? In the same way, when foreign direct investments by multinational companies, they are done in India, then what happens? It results to the inflow of dollars. It results to the inflow of dollars. And when there is an inflow of dollars, it means it is a positive side. That means there is a credit side which is to be recorded. Got it? So please remember, these are the investments in which you are getting the direct ownership and of the asset. And this investment, it can be on physical investment or it can be a financial investment. Okay? But when it comes to the financial investment, it comes here. That is the portfolio investment. And when I'm talking about foreign portfolio investments, it is basically with regard to the investments in shares and all. So here you are investing. You are investing, but you do not get the ownership rights. You are just only an investor. For example, if I am investing money in the shares with regard to British government, then I cannot be the owner of the British government. I'll just be a shareholder. And one thing I'll make you people understand here. For example, direct investment. What did I do? I purchased a house in US. But when I got it rented, then it means I'm receiving rent. That rent received is a part of what? It's a part of this investment income. It's a part of this investment income. In the same way, if I am purchasing shares of foreign countries, that is a part of capital investment, portfolio investment. But whatever dividends I'm getting from that shares, it will be a part of what? Net income investments. And then the third thing, the second thing is with regard to the external borrowings. Now this external borrowings, you can say that you can call it as loans. Okay? Now these loans, they include two things. One is commercial borrowings and the other one is external assistance. When I say commercial borrowings, then it includes borrowings by the country. That means either the government or the private sector is borrowing, and that too from the international money market. So commercial borrowings are done from the international money market, and that too at a market rate of interest. But when we talk about external assistance, then these are borrowings which are done under concessional rate of interest. So these are borrowings which are done at the market rate of interest, and that too from the international money market, and these are done at concessional rates, that is from the international money market. So any receipts of loans, remember it, any receipts of loans or assistance from abroad, it will be recorded on which side? Credit side. And any lending to abroad or assistance to abroad will be recorded on what? The debit side. Got it? And also there is a change. I have not written here, but I should tell you that one more thing is that there is a change in foreign exchange reserve. We all know that official reserve is with the RBI. So whenever there is a change in the foreign exchange reserve held by the RBI, that is also recorded in the debit and the credit side. For example, whenever the official reserves are there it is in the form of gold, it is in the form of stock, it is in the form of convertible foreign currencies and all. So any addition to these reserves, any addition, foreign reserves may, if there is any addition, then that is recorded on the debit side. But any withdrawal from these reserves, that is recorded on the, you can say, credit side. So there is a difference between current and capital. So that is what is the, and always remember, current account, it is a flow concept. Why it is a flow concept? Because whatever are the items which are included that are flow in nature. But what about the capital account? It is a stock concept, because all the items included, they are in stock nature. Got it? So I have given you this. And India, it has a surplus capital account. And when we talk about the overall BOP of India, then the overall BOP is always in surplus. Why? Because the inflow of dollars in India is more than the outflow. Okay. Now there is a question here, ki if the BOP is in deficit, what do you mean by that? When we say that BOP is in deficit, it means that the sufficient dollar or sufficient foreign exchange is not available. So here the RBI will come to the role. Why? Because the RBI is the custodian of the foreign reserves. So when there is a BOP is in deficit, then it means that sufficient dollar is not in the market. So as a result, the RBI plays the role. And in this case, what the RBI does is that it takes out, it withdraws foreign reserves and it sells off. So that withdrawal is regarded as what? It is credit. And whenever there is a BOP crisis, it means that what you are doing is you are overusing or you are exhausting your foreign reserve. Because you have to bridge, you have to finish that BOP deficit. To finish that BOP deficit, what you are doing, you are exhausting or you are overusing the forex reserve. So that is what is referred as what? BOP crisis. And the last time the BOP crisis came in India, it was in 1991. And please remember, like for example, in your country, you have a foreign exchange reserve of $700 million. Okay? And your monthly exports is like, for example, $50 billion. So what is the import cover? Then what is the import cover? It's 5 ones are 5, it's 5 fours are 20. So for 14 months, whatever is your foreign reserves, 14 months, your imports can be covered with that foreign reserves. Okay. So as per your present economic survey, so you have 11 months with regard to the import cover. Okay. And lastly, we can say that apart from the current and the capital account, IMF, it has introduced a new accounting standard, and that too in the 6th edition of the Balance of Payment and International Investment Position Manual. And according to it, the 3 accounts, it has divided into 3 accounts. One is the current, the other one is the capital, and the third one which it has added, it is the financial account. So the IMF, it has added a new accounting standard which includes 3 accounts. One is the current account, financial account, and the capital account. And almost all the transactions arising on account of trade in financial assets such as bonds, equities and all, they are in the financial account. So the financial account has all the financial assets, transactions with regard to the financial assets such as bonds and equity. Got it? So this is what you have to remember. And always one thing I would say here, one more thing, and that is with regard to your, there is a term referred as, you can say that the transactions of the BOP, they are recorded under two heads. Just last thing, they are recorded under two heads. One, you can say it is the autonomous, okay, one is the autonomous items of BOP and the other one is the accommodating items of BOP. So when I talk about the transactions being recorded, it is autonomous and accommodating. That means these autonomous transactions, they take place with economic motive, that is to earn profit. These transactions, their main motive is to earn income, that is profit maximization. But what is the main motive of this transaction? As the name goes, its main motive is to balance the BOP. That is, its main motive is to cover the deficit or surplus in the autonomous transaction. Okay? To cover the deficit or surplus in the autonomous transactions. And here the main motive is profit. Okay, here the main motive is profit. Now, when I talk about the state of these items, then they are independent of the BOP. That means whether the BOP is in deficit or whether the BOP is in surplus, it doesn't matter. They are independent of the BOP. But they are not independent with regard to the BOP. Why? Because their main motive is to balance the BOP. That means if the BOP is in deficit, you have to balance it. If the BOP is in surplus, you have to balance it. So they are not independent of the BOP account. Okay? And when we talk about the autonomous item, it is also referred as above the line. And this is also referred as below the line. And why it is referred as above the line? Because these autonomous items, whether with regard to current account or with regard to capital account, they are recorded first. And then only the calculation of deficit and surplus can be done. So that's why it is called as above the line. Why? Because it is recorded first. And what about this below the line? Why? Because after the autonomous transactions are calculated, then we come to know whether the BOP is in deficit or in surplus. And only after that we can say that what we have to do, and that is being done by the accommodating items of BOP. So that is what is below the line. Okay. So overall we have done the BOP part. And also remember one more thing, that there is a topic called as convertibility. And when I say convertibility, it means that how freely can you convert domestic currency into the foreign currency and vice versa. That means convertibility is how freely can you convert the domestic currency into foreign currency and vice versa. That means convertibility is possible only when there is no restriction. And in India, when it comes to current account, there is full convertibility. Remember it. When it comes to current account, there is full convertibility. And when it comes to capital account, there is partial convertibility. When it comes to capital account, there is partial convertibility. Why? Because the RBI has imposed restrictions. And in current account, there is full convertibility. Post 1993, the current account has become fully convertible. Got it? So this is all what you have to know. Hopefully this entire video about BOP must be really productive for all of you. And once again, thank you all for viewing this video, and please leave your valuable comments and forward it to your friends and dear ones who are appearing for the 2026 prelims. Will come soon with a new topic with regard to your economy special. Till then, thank you all, and work hard and have confidence, and you will be one of them who will be going through the 2026 prelims. Thank you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.